Hi guys, we will continue our second example on how to use our trading journal templates. And for this second stocks, we we use Alibaba stocks where we had done our technical analysis on this previous in our previous session. So we use this, and as far as we know that this stock has potential power up, it has potential to go further up. And when we analyze, it's just I think around here, and now it's already goes up towards its target. All right, but assume that this stock is still at this level, and we want to key in our entry. All right, I want to key in our entry, and now, first, we have to determine where is our stop loss. All right. So, in order for us to determine our stop loss, we had to determine where is various support and resistance. All right. Horizontal support and resistance. So, this is the previous support. We don't want to, at this level, we don't want to get at a very sharp close here. We don't want, again, we are as much as possible allowing our price to fluctuate a little bit, so we might put it a little bit lower here. All right, there is there is doesn't have we don't have any rules, specific rules regarding on this, but as long as you put a little bit lower than a previous support, it would be fine. All right, and we don't want to put it at the sharp support because of this is too close to our previous support. We don't want to get to be stopped out too quick and immediately. Right? Remember, if we didn't get stopped out, and we will, as long as we didn't get stopped out, we will still in the game, and we consider not losing our position. All right. So consider we want to get in at 176. All right, we get in here 176, and we want to get out at this price. All right, so our entry would be 176.2. All right, and our stop loss would be down here. All right, our stop loss would be 154. All right, 154. Why did we put at the immediate support and allow it a little bit small range to fluctuate here? Is because if we consider previous resistance or support is too far way below, right? We don't want to get stop out too far way below down, because at this, if the price from this point and it goes down to this point, and we have to notice that we already wrong, right? We already wrong. Even if we stop out here, we get out from the trade here, we know we are losing position. We don't want to get our losses grow bigger, and we want to get stop out immediately, because if it reach down and break this support below, it has higher chance to go aggressively downward looking for its previous support or resistance. All right, that is the way it is. That is the way stock market works. All right, that is the way uh, price actions uh, price action progressing in the stock market, and that is the people behavior in the market. They're also looking at the previous support and resistance. So you don't have to put your stop too far way below here. Enough if you stop out here, that would be enough. All right, this is the region where you allow the stocks to fluctuate, and you want to put your stop loss at this region too, because this is where you are comfortable saying that, all right, I'm losing and I want to get out from the trade. Okay, you are entry 176.2. All right, we are entry here, and stop loss 154. So for our second All right, second stocks, right? We are analyzing Alibaba Group, right? Alibaba, and account size again 30,000, and we are willing to risk 1.5%, for example, which is $450 of our money. So our entry price would be 172. Is it 172? Yeah, our price would be 176,154. 176 and 154. Right? So you can see that our risk amount is 450, and our shares, the number of shares that we need to buy is 20 shares. All right. And what this supposed to mean is that if we are looking for entry at this price and we are looking to stop out, we are preparing ourselves to be stop out 154 if the stock price move against us, with account size of 30,000, which is again, this is the maximum total of our account, and we have a total risk amount of 450. So we need to buy 20 shares, all right, with 3,520 capital costs. All right. So now we are looking, if we get into the trade and we are looking our profit target, calculating. So you can see here the stock price go up and it goes down again. It gives us that kind of nerve that maybe at this price we are panic, but yet it doesn't touch our stop loss. Am I right? Right. That's why we need to give our stock price a fluctuating moment. All right, fluctuating price where we allow them to fluctuate, to play against us. All right, we doesn't want them to play too much, but we give them room to play against us in a certain price. All right, so that we doesn't too quickly or too quick being stopped out and losing in the market. All right, see what happened when we let the stock move. If we let the stock to move and we allow it to move fluctuating at a certain price, you can see that it goes back up again. Right, when we determine power trend, and you can see it goes up again. So $200 now, we can see how much is our profits, for example. All right, so you can see we are profitable $480 up until now, right? So this is how you use uh, your trading journal template. And this is second example on Alibaba stocks. You can use to any stocks, right? In your own local market, you can use this journal template in order to make ease of your works, to calculate how much shares, and at the end of the day, you want to know of your total account, how much did you make. All right, are you losing or are you making money at the end of the day? All right, and you want to know that your system is a good system, a good strategy, and if you are using the strategy that I'm telling you, you will be fine. But one thing that in trading you have to fix yourself, fix your own psychology. You don't let your psychology ruin your trading activities, and so your psychology and your results regarding on yourself can be reflect from this journal template. That's why you need this journal template in order for you to reflect your training activities and hence improve yourself from time to time. At the end of the day, you have a good system, a fixed strategy that you can rely on when you get in the market, and you also want to see that how much trade that you need to do on average every year. All right, for example, every year, and all right, in order for you to get a profitable trade in total capital, and also you want to see how did you doing with your uh, risk uh, risk profile. All right, so I hope that when you are doing this, you get your risk management fix in place, so that you can see at the end of the day how much does it can help you, right? How much does the suitable numbers of total risk amount and total risk percentage that you are comfortable with, and subsequently able to generate uh, a total profitable trades at the end of the year. All right. Thank you.